Well, hello, welcome to Breakout Trading Answered, the show where we talk about all things breakout trading. Glad you could join us today. We have a ripping show ahead, and joining us today actually is Tomas Nesnidal, breakout trading specialist, all-round good guy, and a guy who doesn't like the cold weather. Hey, Thomas, how are you doing?
What an introduction. Thank you very much, Andrew. Hi, friends. Hi, everybody. I hope that you guys with awesome questions from the last time are all back, and we cannot wait to see new faces here tonight as well and talk about breakout trading. Yes, Andrew is right. It's a little bit cold here, 11 degrees of Celsius here in Spain, which is very, very unusual. So I got some flu, and I'm saying that because I want to apologize in advance if I will be coughing a little bit. I know it will be a little bit distracting, so please be patient with me. I apologize. I'll try to behave myself as much as possible and cough as little as possible. But 11 degrees, it's 11 degrees. So I'm sorry.
Yeah. Well, thank you very much for turning up today, because I know you've been sick. I know we spoke yesterday and you're a little bit sick then. So glad that you could join us. And we've got a lot of great stuff to talk about today. But first, last show, I was a little bit rude. I didn't say hello to everyone in the audience. I wanted to get straight into the show. So today I've got on my notes, make sure we say hello. So I just want to say a quick hello to some people in the chat today. Hey, Egyptian trader, are you actually from Egypt? Or what do you mean by Egyptian trader? Thomas, g'day, Thomas. Hey, Hugo. Hey, Eric, good to see you here. Yurka, I think. Was that Yurka?
Oh, Yurka,
yes.
That
yes,
was
I got it right this week, didn't I?
Yes, you did.
And then, hey, James as well. So we got a good group of people here today, and I recognize some names from asking great questions in the last couple of shows. So thanks for joining us today. Now, this is obviously part 4 in our 5-part series. So we're getting to the end of this series. But in the first couple of shows, well, the first one was 5 ways to finish your trading year strong. The second one was 6 top tips for better algo breakout trading. And then last week, or the last show, which is 2 weeks ago, building breakout strategies that actually work. So what are we going to be talking about today, Thomas?
Well, so we already talked about a lot of important things when it comes to breakout trading, but I thought that maybe today we should take one big step back and also really raise the essential question, which is why breakout trading? Because we've been talking about how to improve breakout trading, how to finish strong with breakout trading, but we never got to the essential question, which is why breakout trading in the first place, right? And I think there are a lot of crucial points to talk about breakout trading. And again, I think it's a phenomenal direction. I think it's very timeless. We will be talking about many points tonight. So I'm a big advocate of breakout trading. Of course, doesn't mean I wouldn't be a fan of other trading styles, but it just that's what I felt laughing with breakout trading, and that's what I'm going to talk about. Why I think it's the best approach for a lot of traders.
That's an excellent reason to ask why. So I like that. We've got a couple more hellos in the chat. Hey, Roy, hello from Ireland. Thanks for joining us from Ireland, Roy. Pete, 1234, g'day. And Dan, good to see you here, Dan. So, Thomas, shall we get started, or did you want to do some warm-up or something? Because I feel like my face is not working today. I can't speak properly, so here we go. I'm ready to go.
Let me do the talking. Let's get to that.
Thank you.
Yeah. So we have 7 different points talking about breakout trading, why breakout trading tonight. And let's cover them one after another. So the first one is really, and I think this is quite essential one, is just like breakout trading. It's proven. It's been here for ages. So we're not trying to really reinvent the wheel. We're just taking and expanding on something what's been here for a long, long time. And it's been working 50 years ago. It's been working 15 years ago when I started with breakout trading. It keeps working the whole time. And a lot of traders, they have these questions like, when too many traders will do breakout trading, could it be that one day it will stop working? Or if everybody trades breakout trading, well, then we cannot profit, all of us, and questions like that. And believe me, I used to have these questions at the beginning of my breakout trading career as well. Yet more than 10 years later, I'm still here, and I'm still not only thriving with breakout trading, but I'm also running my hedge fund with breakout trading. So basically all my previous 10 years old worries were totally dissolved, because there are a lot of different traders with a lot of different styles, with a lot of different approaches. And I believe that in trading, there's a place for everyone, for everything. So all that worries are pretty much, I would say, kind of a little bit naive. And from my perspective, this is one of timeless approaches. And as I said, it worked 15 years ago, and I'm 100% sure it will work in many, many years to come. Otherwise, I would never launch my own breakout trading hedge fund. And also, when you think about breakout trading, like the fundamental idea about breakout trading, it's basically about breakouts, right? It's about these abrupt, sudden eruption in markets, these breakthroughs, these volatility breaks. And we saw them 100 years ago. We saw them yesterday. We saw them today. We will see them tomorrow. So the fundamental base of markets will very likely be still the same, which is there will be eruption of movements, there will be breakouts, and it's just up to us traders, breakout traders, to make a good sense of that and come up with the appropriate with a good appropriate way to profit on that.
Yeah, that's a really good point, because I think a lot of traders are always concerned about edges, and if the edge is going to decay over time. But really, we're talking about something much bigger here, right? We're talking about an approach that's been timeless and probably will continue to a long way in the future. So there's no, I guess, risk of trying to build something that's not going to work. Breakout trading is probably not going to stop working tomorrow. So that's a good point.
That's a great point. Yeah. And there will be strategies that will decay over time, but that will happen in any other direction, not just in breakout trading. So yeah, that's a great point. We're talking about the whole direction, and this direction, it's really timeless.
Yeah. Okay. So that was number one. Breakout trading is proven. It's been working for ages.
Right. The second one, and this is pretty, I would say this is maybe the biggest one, proving that it really is a timeless approach that just will work forever. And that's the fact that breakout trading works pretty much on everything. I mean, it works on futures, forex, stocks, crypto, CFDs. You can day trade breakout strategies. You can swing trade breakout strategies. You can long-term trade breakout strategies. You can even invest with breakout strategies. And we had a discussion long time ago, like 8 years ago, with a friend of mine, and we were wondering what happens if we take historical data of temperatures. So we took some data from several cities where we had this historical records of temperatures in each given city, and we just for a fun we tested our breakout models on that chart of temperature changes, and not surprisingly it worked as well. So it's really universal. Now, I'm not saying it will immediately work every market, because we know, and Andrew, that some markets, futures markets and other markets, can get more challenging than others. Like building strategies, breakout strategies on currencies can get more complicated than on, let's say, energies. So there will be more challenging and less challenging markets. But overall, it really is universal. That's the beauty of that. Like when you choose one style, one direction, and that direction is breakout trading, you're pretty much equipped with a direction that will stay with you probably your entire life. Doesn't matter what you want to trade. So if you want to start with, let's say, micro futures, then later expand on regular futures, then expand on stocks, then throw in occasionally some cryptocurrencies trading, you can all do that with breakout trading. It is that universal. And I think this is a fantastic advantage, because again, with one approach, one thing, one specialization, and your possibilities are pretty much limitless. So I think that already speaks a lot.
Yeah, so it almost sounds like you're saying breakout trading is a lifestyle, and once you become a breakout trader, you're a breakout trader for life.
Right, it is lifestyle for us, isn't it? Because we are breakout traders, and now we're basically spreading this lifestyle because we're so enthusiastic about that. But really, it is an enthusiastic approach because you have so many possibilities. You probably will be more overwhelmed with all the possibilities rather than with the limitations and worries and stuff that you might potentially not do. So yeah, very, very universal.
Yeah, speaking of, you just mentioned that there's breakout trading works on a number of different markets, or it's universal. Just wondering about in the audience today, what do people like to trade? I'd be interested to see, do we have futures traders here, or stocks, or forex, or crypto? Just put it in the chat, please. Let us know what markets you prefer to trade, and I'd be interested to see exactly what the mix is there. So we won't wait around for that. We'll give some people some time to put that in the chat. But yeah, let us know what do you like to trade? What markets are your favorites?
Yeah.
So that was oh, sorry, Thomas, go.
Yeah. Meanwhile, everybody will be expressing his or her opinion. So I just said that it works on anything, but let me clarify also one thing. It doesn't mean that creating good breakout strategies is easy, right? Like, I don't want to oversimplify it. I'm just saying it does work on anything, but you still have to do your work. You still have to do your homework. And sometimes creating a robust, good breakout strategy, algorithmic breakout strategy needs time. It needs to be patient because I think we already shared in one episode your statistics, Andrew, which is like 99% of your candidates will and does end up in trash. It's just one percentage of candidates are really viable strategies, and that's a good thing. That means really that it is hard to find a good edge, and that you can always be ahead of your competition if you do your homework. So yeah, it does work for anything, but be careful. It doesn't necessarily mean you don't need to do anything. You don't need to do your homework. You do, and it still requires some effort to create a good breakout strategy on anything.
Yeah, that's a good point. So we got some feedback here in the chat. So Neil likes NQ. Neil's probably been making a lot of money recently. Pete also does NQ futures and ES. Hugo is a futures guy. James, CFDs and spread bets, indices mostly, right? Egyptian trader, futures, but not managed to make any breakout strategies yet. Well, you're in the right place, Egyptian, because that's exactly what we do here. Yurka, futures and crypto. Chuck is micro, mini, S&P, and Pete, crypto futures. So quite a few futures traders in there. Yeah, and indices seems to be popular, and some cryptos.
Great.
All great markets for breakout trading.
Sure, for sure.
Yeah. So that was the second point. It works on anything. It's extremely universal. Different markets, timeframes, and even styles, day trading and swing trading can be used with breakout. So that was point number 2. What's next?
Yeah, what's next? So I think one of the other biggest advantages of breakout trading's approach is that it's really, really very simple to conceptualize and assemble into a model, workable, proven model. And this is not given because I went through a lot of different trading styles and approaches. I went through, including option trading or statistical arbitrages. And believe me, if we had a discussion about option trading or statistical arbitrages, a lot of people could not wrap their heads around it. It really is challenging. It just like, sometimes it's very hard to conceptualize it, especially with options. It's hard to describe it, and it's very difficult to assemble it into a proven model. This is not the case with breakout strategies. The breakout strategies, it's really easy to conceptualize it, create a model around that, and then really, if you want to explain a breakout approach to anybody, it is not difficult. Like, you can do it in a couple of minutes. Whereas try to explain option trading to anybody, that's nearly impossible. so it doesn't require you to be a PhD or have whatever education to understand this. It's really for everybody, and we have very successful traders who work in some very noble professions like firemen, right? So that means their education is probably not university degree, and they're phenomenal traders, breakout traders, algorithmic breakout traders. Now, after being with us for a couple of years with BTA, running their own money management, asset management. So it really is for everybody. And I think that's another great point, because it's accessible to everybody, which is not the case with many other directions in trading.
Why do you think that's important, though? Why is it important that you can assemble it into a simple concept and model?
Because first of all, you can understand that you know what you're doing. That's very important. It just like confidence. That's a great point, confidence. Because for example, I spent a couple of years with options, and I can assemble option strategies and approaches, but they're never simple. They're really hard to conceptualize, and then they can have too many moving parts, too many options to create a viable strategy. With breakout trading, it's really, you get it. It's just like you study it a little bit, and then you're like, I'm getting that, and that's why I'm confident. I know what to do, I know what to follow, and I know how to do that. And also, when you have a simple approach, conceptual approach, then you can really play with that. You can get into that kind of like a play from modality, when you just say, okay, now I'm focusing on this point, and then you're coming up with different ideas how to improve your filter, breakout point of initiations, and you can really become creative, because now your boundaries are well set in an understandable, confident way, and that gives you have very, very well defined space within which you can create and bring up something new.
Yeah, well said. Okay, so that was point number 3. It's simple to conceptualize and assemble into a workable model, which, as you mentioned, makes it more accessible. It's easier to get confidence in a model that you understand is working, and then also you can adapt it in your own special way as well. So that's an excellent point. So that's point number 3. What have you got for point number 4?
Yes. So the fourth one is. Great thing about breakout strategies is tradable on normal charts. And again, when I started with algo trading, I had like this. I had the kind of mentality which I believe a lot of algo traders have in the beginning. They believe that the fancier something is, the better edge they will get. And I can tell you that about 10 years ago, I invested a substantial amount of money to acquire a history of one tick data for all the futures and many stocks, and I paid a huge amount of money for that. And the idea was that I wanted to prove, I wanted to try something that nobody does. Like, I wanted to be fancy, I wanted to be special, so I wanted to trade with Renko charts, range bar charts, momentum charts, all the fancy tick charts. I don't even remember all the names, but you get it. Like, with all the fancy charts. And I could do that because I could backtest on 10 years of history, because I got that history, I paid for that data. So I thought that this will give me some extra edge. Well, it turned out it was a total nightmare. That was my biggest nightmare ever, and not even the fanciest trader software could handle that huge amount of data, because the data file for each market could be several gigabytes large.
Yeah.
It was constantly crashing. It was extremely slow, but when I'm saying extremely, it was probably thousands times slower than regular X-minute charts. So for any test, you were waiting ages and ages. And at the end of the day, the strategies I created were not any better than breakout strategies created on normal X minutes charts. And then when I came up with my conceptual approach to breakout trading and my model, and I realized it can be traded on simple X minutes charts, it was a huge relief, because first of all, it sped up the fabrication of strategies by huge amount. So that means with these normal 15, 30, 45-minute charts, I was able to create a strategy in a reasonable amount of time, which really gives you confidence, because now you don't need to wait 3-4 months like with range bars or whatever to create a viable strategy. And then your computers are really fast, and everything it just speeds up. And then because you're able to start creating more strategies, you gain more confidence, and you don't need any special tech. I can develop great breakout strategies on my laptop, or probably in a couple of hours if I have a little bit of luck. And that's because I do not need to work with anything fancy. And it was similar when I traded statistical arbitrages. Like with statistical arbitrages, you need to trade 2 different vehicles, and then you're running into technical issues, which are more common than we think with these special approaches. I traded options that you cannot even reliably automate. That was a nightmare. So thanks God, we have something what is tradable on normal, basic, essential charts. It will give you so many advantages that you have no idea. And believe me, not a single fancy chart will give you any extra edge. It's just a fallacy. It's just a false idea. Still, somebody still has to prove it to me, at least when it comes to breakout trading. Can work for other directions, I don't know, but not for breakout trading.
Yeah, it's funny. Actually, I had a similar experience early on in my trading journey where I got into market profile. And I remember thinking that I needed to do something a little bit more sophisticated. I printed out a book that was like this thick and went through it and looked through all the charts. And while it was interesting, it really wasn't valuable for me. Now, I'm not saying that type of trading doesn't work. I know there are traders that use market profile successfully, but yeah, really, I agree with your point about keeping the charting simple. It can be complicated enough as it is. Why make it even more complicated by having fancy charts and stuff? So I have to agree with you on that one too.
And I think market profile is great. I also know a lot of traders who are successful with market profile, but I think they're working way too hard for that. They need to execute it mostly discretionary, sit in front of screen a lot of time. I mean, there are faster way to make money in trading.
Yeah. All right. So that was number 4. Tradable on normal charts, no fancy charts required.
Mm-hmm. So the fifth one. Yeah, the 5th one is kind of similar, and it again gets back to the simplicity, and is the fact that breakout strategies can be coded basically in any trading software. And this is another huge advantage, because I know there's endless of software out there, and there are some very fancy traders using MetaLab and Python and stuff like that. And just learning this software can be overly complicated, and it can literally suck all the energy from many beginners just thinking all that software they would have to learn. Whereas breakout trading, it's simple. I'll show you in a couple of minutes, but it's simple. You can really code it very quickly, very easily. And believe me, I can even code a strategy in Excel spreadsheet. There's a plugin for Excel spreadsheet which can download data. There are already some predefined filters and conditions. So even in an Excel spreadsheet, you can create breakout strategies, which again says something. It says that it's not really complicated. So with breakout strategies, it doesn't matter that much what software you really use, because it's codable in any software. I personally use TradeStation because it's an industry standard. For me, it's a proven company which got an IPO recently, so it's listed on exchange. It's a big company. I'm not saying it's perfect, but it's an industry standard, and I want to go with an industry standard. I saw many hedge funds using TradeStation, so I use it as well. And in TradeStation, it's super simple to create a breakout strategy. It's really simple, and I'll show you. But you can code it anywhere because it's not difficult. It's not complicated. The approach itself is so common sense based that anybody can really code it.
Yep. I know you're going to go through an example in a couple of minutes to show us that. I'm interested to know, in the audience today, what trading platform or software do you use? Are you TradeStation or MultiCharts or something else, MT4? So let us know in the chat. It'd be interesting to see what everybody's using. So that was point number 4. can be easily codable, 100% tradable by a computer, very important, and no fancy software or conditions needed. Okay. Point number, he's going to just do a cough while you're coughing your lungs out there, Thomas.
Yeah, excuse
We've
me.
got a couple of responses here. Zorro from James. Hugo is TradeStation, Egyptian trader, used to use PRT, not sure what that is, but learning TradeStation. Okay. So you're going to love the example that we're going to share in a couple of minutes, Egyptian. All right, we can move on to the next point, Thomas. Multi-charts from Thomas. Yeah.
So the sixth one is that breakout trading. You do not need to rob a bank to start with breakout trading. You can really start with a reasonable amount of money. Now let me just clarify this. I believe that there are two types of traders. One traders who do trading more like a hobby or something they want to maybe learn or whatever the reason, or speculate or have fun, whatever the reason is. And then second group are like serious traders who want to make like serious income. And you can never ever make a serious income with $500 micro lot account. That's just not possible, period. So if you want to be a successful trader with a stable primary, secondary, whatever income, you really need to be adequately capitalized, and that means at least a couple of $1,000s. That's the minimum if you want to take it seriously, if you want to work with money that you really do mean something, to create money that do mean something, because nobody will probably live from making 100% of $500 account. Then you need to capitalize yourself at least couple of $1,000s. And the good advantage of breakout trading again is that you can easily start it with a couple of grants. You can start with micro futures, great thing, a great vehicle to start breakout trading with, to really learn a lot, to get into that with very little risk, very limited risk, and with just a couple of $1,000s. And again, that's not given with any other approaches. Just think about stock trading. You need, just to day trade stocks, you need $25,000. If you want to do option trading well, or other approaches, sometimes you need $20,000, $30,000. With breakout trading, if you have a couple of thousands, you can already start, get your learning, and it's possible. And I think that's another big advantage.
Excuse me, I was just having a cough as well off the while you're talking there. So yeah, that's a good point. So you don't need to require a big trading account to start with. We got a question in the chat actually from an Egyptian trader on this very topic. Let me put this one up on the screen, Thomas.
Great.
Micro E-mini is a good place to start, as there are only 4 that are available on TradeStation with the basic data package.
Well, micro and E-mini are two different things. So you're probably talking just about micro. Micro are a great place, and there are way more in TradeStation. You just need to go through the packages or ask them to give you exact instructions how to access all of them. I do not trade micro, so I trade regular. So I don't know what all the requirements are right now, but 100% I'm sure that you can trade at least some 9 or 10 micros in TradeStation right now. You just need to communicate with the support how to get access to all of them, and they're great. Like you can create a great portfolio with micros. So absolutely.
Yep. We've got a question here from Pete about realistic rate of return. I think we'll save that one for the end. We'll get through these points first, but we are going to come back to that one, Pete. So just hold off a little while. We'll come back to that. So what are you? That was point number 6. Does not require a big trading account to start with.
Right. And the point number 7 is quite easy. And now just, if we just summarize everything, what we just said, and we wrap it up into one final point, it's just that you really and literally can start today. There's not much that should really hold you back from starting today. There's plethora of the software available out there. There's a lot of data history for for basically all the futures to create a viable strategy to backtest it. You don't need a big trading account, which is another big advantage. You don't need to have PhDs to start. You might need to learn some basic coding, but if I could do it, everybody else can do it as well. So you really can start today. It's not complicated. Also, Andrew will probably bring these points later on the screen, but if you still didn't go through that, we also, if you want to start, we have a free webinar, which is on 14-day breakout strategy challenge. So we will show you the link again at the end, but on this link, you will also have opportunity to go through a free webinar and potentially start as well. But doesn't matter how you start, whether with this webinar or any other way, you can start today. And, I think basically that you should start today, because first of all, there's no reason to keep postponing trading. I believe there's nothing in front of you to start, why you couldn't start today. Second, there are opportunities in different markets every day. Third, it just takes you to put together a simple plan. What will I do this week, next week, next month? And in no time, you can be up and running and, just having your first breakout trading strategy and building your confidence and building your know-how. If you haven't seen, by the way, the very first episode yet, which is about how to finish your year strong, just definitely go back and watch the very first episode of this show, because that's where we talk about this way more. And I believe that that's a good thing, that good episode to ignite you and put you on fire and get the things done.
Yep. And you're going to show us a example strategy very soon, aren't you? So that's also another way to get started. So how about we do a quick recap of the 7 points, and then we can move on to the next segment with the example strategy. So we've actually got a slide here with the points. Let me put this up on the screen. You can take a break for a minute, Thomas. So the first point was breakout strategies are proven. They've been working for ages, and as long as the markets keep moving, it will probably keep working for a long time yet. Second point is they are universal. They work on anything, different markets, different timeframes, and they can be used day trading and swing trading. The third point was it's simple concept. It's easy to work, easy to assemble into a workable model, which then makes it much easier to have confidence in what you're doing and adapting it to what you need. So it's important to have a simple concept there. We can trade on normal charts. You don't need to download a whole bunch of tick data or fancy charts. Very simple to implement, which also goes into point number 5, is that it can be codable and 100% traded by a computer, which is what we're all about here. You don't need any fancy software or conditions to get started. And then number 6 is you don't need a big account, a big trading account. Some markets you do, but breakout trading on, we talked about micros and minis and other markets. You don't need to have a big account to start. It's very accessible. And then you can start today. There's that link with the free webinar on it if people want to go and see more about that. But I think now you've got something to share with us, a strategy, right? Now, I can't hear you, Thomas. Are you on mute?
Sorry.
There we go.
You can. Yeah. Sorry, I muted myself because of coughing. Okay. So normally in this part we do strategy analysis, and we did receive a strategy for analysis for an analysis, which I will analyze in the next upcoming session. So don't worry, whoever the sender was, I don't remember, but it will be. We will go through that strategy in the next episode. But in this episode, I deliberately prepared my own example, and I prepared something super simple. We're not going through anything complicated. I just wanted to show you what it really, what it can look like an actual code of a breakout strategy. So it's more like an example. But first of all, let me share the screen, and let me show you the result, which will be quite interesting. So share screen, and let me know when you'll see it, Andrew.
Okay, it's coming up now. Yep.
Yeah. So this is something I just assembled very, very quickly in literally 5-10 minutes this morning before the show. As an example, it's just for the sake of to show you what a breakout strategy can look like, to give you some idea, but also to give you some taste of something which is really realistic. So this obviously is just for a sake to explain to you more what it looks like, what the code looks like, if you can do it, if you can handle it. And this did not go through any extensive robustness testing procedures, which are very important part of development process. So I'm not even calling this a viable, robust strategy, but it's super close to some actual strategies that we actually do trade in our hedge fund. So with strategies like this is like super simple, 5 lines of code. I'll show you basically on E-mini S&P, 30 minutes, 10 years of data history, a simple thing which is almost 60% of time right, and the average trade is $192. Now, this is for one contract, traded per one contract, the future E-mini S&P, and you know, I know that somebody could object like, well, it's we really have long periods of not having new equity highs and not making money all the time. Well, that's a different issue, which is really achieved through diversification and putting more strategies together, which we will probably cover in some of upcoming sessions. But for now, this is just like a typical breakout strategy result. Like if I would take some high robustness level strategy from our hedge fund database, there would be a lot of strategies that would look like this. So that's that's pretty okay, right? Like it's something that you probably would consider. Now, what I want to show you on this example is that what the code can look like, so you understand and you can also get some idea if you can code it in your software, what the coding, how complicated it would be. So let me bring up the code now, which I have here in another window. So that's going to be this one, I believe. Yeah, can you see it now?
Yes.
Yeah. So the whole strategy, if I would really try hard, I could probably squeeze it to 4 lines. Like one line would be the breakout condition, second one filter. This would be third. It just because of this, I just had to put it on two lines so you can see it properly. One would be exit, one would be stop loss. But this is pretty close to actual strategies that we trade in our hedge fund. It can be a little bit more complicated. Like there can be secondary filter, or there can be a secondary exit technique. So there can be some additions, but fundamentally it's not that far away. And these really are workable models. These are models that can be or workable, even ideas that can be worked out into and finalized into workable strategies for certain markets. And it always looks pretty much the base of that, the essential things looks always like this. You basically need to calculate some breakout level, right? Like you need to know where your breakout entry level is. And again, if you want to learn more about this one, watch all the previous episodes of this show, because I already talked about the model, about stuff like that. So it will really help you a lot to understand, get the whole picture. But basically, the breakout entry level can be something just like you take yesterday's close, which in easy language you type just like close D, like close of the day one before, so the last day, and then you add some breakout, some space for the breakout point. So you can say it will be, for example, 3 times of volatility calculated as average true range. And then you will need some filter, because of course you want to trade only with in favorable markets. One of very good breakout filters is ADX, because ADX tells you how strong the trend is. So we want to obviously avoid choppy markets. We do not want to trade in choppy markets as there's no breakthrough, whereas there's no momentum. So we set a condition that ADX indicator, average directional index, needs to be above 25. And that's basically it. Then all we need to do is just to set this entry condition. that we want to break on this breakout entry level with stop order, and only if the filter condition is valid. That's it, guys. That's it. A lot of strategies we trade in our hedge fund look, at least the entry part can look quite similar. We do have strategies with one filter only. We even have strategies with filters without any optimization inputs. So that's pretty close. It's not that far away. And then we need to exit somehow. So one proven technique to exit on indexes can be just exit on Friday at the end of the day. So very simple condition. And then second, you need some stop loss. So we put some stop loss here, $1,500. This is just a protective stop loss. It just hit, let's say, 10-15% of time, because most of the time you will not exit on this hard protective stop loss. Now, I don't want to oversimplify it because, of course, there needs to be robustness testing procedures. Sometimes there can be other elements to a strategy. There need to be some optimization done. And, of course, optimization, if not done properly, can lead to curve fitting, which we can cover sometimes in the future. So I do not want to oversimplify it and just create here some false impression that all you need to do, write these 5 codes and you will be a millionaire tomorrow. That's not the case. But I want to show you that it is accessible, it is approachable, it's doable, it's not a magic, it's nothing overly complicated. This is very essential breakout trading. This is the very basic thing, the very essential thing that you will spend most of your time with. And it's not a brain surgery, is it? Like, now, guys, tell me in chat, does this require brain surgery or some PhD, or can you just play with this and that's the foundation, and that's it, guys. I mean, like, it can get more complicated if you want to, but most of the time you will be surprised that just staying with these simple boundaries, you will be able to create a lot of great breakout trading strategies. And that doesn't mean they will all of them will work, and that doesn't mean you won't need to have a lot of patience with the robustness testing procedures, which are very essential parts. But when you get a super robust, viable strategy, it can look pretty much like this.
I don't think anyone can argue that wasn't a simple example. And I think especially if they, anyone that understands the model that you use, Thomas, there's really only just a couple of pieces to it. It's very simple. If you're not aware of the trading model, the breakout trading model that Thomas uses, you can find, I've put a link in the chat there, 14-day breakout strategy challenge.com. It's just a free webinar thing where we go through the model and show some examples. So I recommend you go and have a look at that one. So yeah, thanks for that example, Thomas. Was there anything else you wanted to add to that?
Not really. That was it.
Okay, excellent. Well, we got a couple more questions in the chat, which we might actually, should we go through them now? Because I know the next part is we've got the motivational quote. We've got a Jesse Livermore quote, which is going to be, be good. But how about should we do a few more questions before we get to that?
Let's go.
Okay. So I've got a question here from Egyptian Trader. Another question. Thanks for the questions today, Egyptian. Is automation required to find a decent amount of strategies? I've tested over 50 candidates so far and not found a robust strategy yet. I can test around 10 candidates a day at the moment.
Yeah, great question. So automation is definitely a big help. It's highly recommended because full automation just will speed up everything tremendously. And, please do not get discouraged because you haven't found a robust strategy yet with 50 candidates. First of all, that's normal. Second, it can get quite arbitrary. Sometimes you test 10 candidates and you have 2 strategies, and sometimes you test hundreds candidates and you have 0 strategy. So you really need to be patient. Even with good automation, you need to be patient. Even with all our servers running in our hedge fund, we need to be patient because finding good edges it's still challenging. It is still hard. A lot of traders, they approach this a little bit, I would say, in a vague way, just like not really taking it seriously, not having enough robust edges. So find out a robust edge takes time. and automation does help. And I created a lot of strategies without automation. Actually, I came up with automation 5 years ago with my hedge fund, and before that, I just do that manually. So it took more time, of course, and it is doable. But with automation, it's definitely easier and faster. Yet not really obligatory.
Yep. Okay, we got a question here from Pete. I'm about to cough. Sorry about that. Okay, so here's a question from Pete. Have you seen a change in the market since May of this year? My strategies have changed since then. Noise or volume moving into micros, perhaps?
Pete, quite honestly, I see changes in markets all the time, and the question is what market you're talking about. And here is the thing, that's the advantage of portfolio. So we have an assembly of portfolio, or I always had an assembly of portfolio, and with that portfolio, of course, you will have periods of markets that will keep changing. So I remember that like 10 years ago, I was constantly frustrated that it looked like my index strategy stopped working with the exit at the end of the day. So I changed a lot of exit techniques in that strategy, and 3 months later it started working, of course, with my new exit which were not working. So the point is that markets do keep changing a lot. Like by May, they can be working on particular market just fantastic. Then 4 or 5 months, they can have periods of stagnation or not working, and then all of a sudden they can kick in again and make you a new equity high. That's the point why we need to always be diversified, why we need to trade more markets, low correlated markets, markets from different groups, market groups, because there always will be moments where something will not work. And I remember 3 years ago we had a discussion about it with Andrew about Japanese yen, because Japanese yen was totally dead market for me. So I switched all Japanese yen strategies, and a couple of months later Andrew told me that he never made so much money like he did that year on Japanese yen.
It was
Go
a great
figure.
year for the yen.
Yeah, go figure.
Yep.
So it always keeps changing, and that's why we need to be diversified, because if we're well diversified, at least something will hopefully work most of the time and something will not, but overall we should be able to create a good distribution of profits.
Yeah. Pete added it in the chat as you were talking about that ES and NQ. So focusing on the indexes.
Well, and NQ is challenging. Yeah, NQ is challenging. It's super volatile. It's got new volatility highs and all the highs. So yes, NQ will keep changing. But Pete, it can kick in back tomorrow, and all of a sudden you can have great trades. It's the nature of NQ right now. NQ, it's quite difficult market right now. It can be super rewarding, but you need to be patient because it definitely has got its challenges and weak moments as well.
Yeah. We got another question here from Pete. Sounds like there's a bit of a competition for questions today between Pete and Egyptian. Let's put this one up. Any of your strategies using extended trading hour sessions?
Oh yes, many of them. Yes. Extending trading hour sessions, it's a good approach, good thing. And I think we talked about these things. Was it the previous episode where we talk about time frames and session? So again, yeah, we do, and definitely I recommend watching previous episodes. We talked about this one.
Yeah. So there are obviously a couple of things you need to look out for, though, when you're doing extended trading sessions. Do you want to quickly mention a few of those?
Yeah, we always look. So first of all, the overnight volume, right? Like, so what we always do in our hedge fund, we plot the 1 minute chart, and we want to see there's a on a 1 minute chart on average, there's a good volume in the extended session. And now what's a good volume? Well, it depends how many contracts you trade. In my hedge fund, we trade 50 contracts on average on particular market. We like to see at least 150 to 200, 250, 300 volume on 1 minute bar. If you trade one contract, if you see 50, the volume 50, 60 trades, transactions, in 1 minute, that's absolutely enough for your needs. So that's important. Yeah, volume.
Need to be selective, because some markets
Selective, yeah.
have extended trading hours, but the liquidity is horrible, right? So you can back test a strategy in that market and it looks great, and then you try and trade it in real time and it's just falls apart. So you definitely need to be careful of liquidity, but it's possible. There's some edges there.
Absolutely.
Yeah. Okay. So thanks for that question, Pete. And Pete has another question, but I want to jump to this one for Egyptian first. How to calculate the best generation and population numbers in genetic optimization? I guess that is. TradeStation suggestions are very high.
You don't need to go high really with generation and population. So we did a lot of testing. So first thing is that population is way more important than generation, and your population should be, let's say, 5 to 10 times bigger than your generation, and your generation should be anywhere between 20 and 100. So if you work with let's say generation 50 on average, which is what we work with, 50 generations on average, then your population should be, let's say, 4 to 10 times higher. So we talk somewhere between 200 and 500 population, and that's also the range where we normally work in our hedge fund. We have population between 20 and 1000, generation around 50, sometimes 100. You do not need to go higher. And also, when I started with the genetic prototyping 10 years ago, computers were really slow, and I had to start with as low as 25 population and 10 generation. So just to give you some perspective, and it worked, and I was able to create strategies. So we're very spoiled with these numbers nowadays.
Yeah, we are, absolutely. So there was a question in the chat from Pete about realistic rate of return for a hedge fund. Just scrolling through the chat, I can't see it. So maybe while I'm trying to find it, do you want to speak about that a little bit more? Because I think it's a good question. Realistic rate of return. A lot of traders have unrealistic expectations. So.
Yeah.
Oh, here it is. I found it. Yeah, go on. Sorry.
So it's basically, it is in breakout trading portfolio, and again, different hedge funds have different styles and different approaches. So I cannot talk about all of them. I can talk about just breakout portfolios, especially futures breakout portfolios. And there's a simple math, and this math is that, first of all, you need to know what is your allowed biggest drawdown, and then you make somewhere between 2 to 3 times of your average rate drawdown or allowed drawdown, which is where you should target and which is doable. So, for example, I know traders who can tolerate 50% drawdown, which I could never do, and they're able to make about 100 to 150% return on average because they risk a lot. I personally risk 20 to 25% maximum, so I target somewhere between 50 to 60%. And with our institutional clients, they're super conservative, and they only want to have 5% drawdown, between 5 to 10%. So their expectation is somewhere between 10 to 20% only.
And even that's still quite high, right? Because there are funds out there who are just trying to get 1% a month or even less, but they're aiming for more of a stable equity curve, right? They don't want very much drawdowns at all. So the question, I think, really should be about risk-adjusted return rather than because, as you mentioned, you could get 100% return, but if you've got to get 60% drawdown and you can't cope with that, then it's kind of pointless. You'll very probably stop trading at the very worst moment as well. It's Murphy's law, right?
Absolutely. Yeah. Murphy.
Yeah.
Welcome.
Murphy.
Yeah.
Well, I think we've all been hit by Murphy at some stage. So that looks like the last question in the chat. So before we wrap up, how about the motivational quote of the episode? Let me put this up on the screen.
I think I found one which ties very nicely to breakout trading, which of course is from no one less than famous big Jesse Livermore, one of the biggest speculators of all times. And he said, remember that stocks are never too high for you to begin buying or too low to begin selling. And that's really the whole idea behind breakout trading, right? Like, many times I ask myself, wow, this has been a just huge breakout. We're already high in the opening of day, X amount of points. Is there still room to make profit? And many times I'm surprised, because not only there's plethora of room, but just the rest of the day makes 4 or 5 or even 5 times of what that grand opening was. So there's always a room, and that's beautifully aligns with this quote that there really is nothing like too high or too low. There doesn't mean that it will always work, but definitely if something is too high doesn't mean it cannot get even higher. If something is too low doesn't mean it cannot go even lower. So very, very related to breakout trading mentality.
It's such a good point,
Lifestyle.
especially lifestyle. I was just going to say that's such a good point, because especially with the markets in the last couple of years, people have been calling tops in the indexes for non-stop, and they're probably hurting if they're taking short positions. So
Right.
now this is a really good point that you make there, and Mr. Livermore was, I guess, a clever bloke. So thanks for sharing that quote. Let me just get this one off the screen. So how about we, it looks like the end of the questions. So how about we do a quick wrap up, and then everyone can get on their way. So today we spoke about the 7 reasons why you should trade breakout strategies now. And they are just quickly proven. They've been here for ages. They work on anything. They're simple to conceptualize and assemble into workable model. Tradable on normal charts, easily codable, do not require a big trading account, and you can start today. So Thomas shared an excellent example to show how simple breakout trading strategies can be. Well, that wasn't a complete strategy, but just a description of the model. If you want more information, you can go to that link. I did post it in the chat before. Breakout, I'll do it again actually, because I think 14-day breakout strategy. Can I start again? 14-day breakout strategy challenge.com. I'm about to cough as well, so I'm really struggling. Go there. That's a free webinar, and Thomas explains his model and how it all works. That's very
can you put it on the screen? Is it possible?
I probably could if I was organized. Here we go. I can do it.
Okay. Okay, let's keep it there for
here we go.
Seconds.
Is it going to work? There we go.
Yeah, fantastic. Yeah.
I put it in the chat because I think you can click in the chat and it opens up the tab. So if you're like me, a poor typer, then you'll be sitting at that for 5 minutes. So anything else you wanted to mention, Thomas, before we finish up for today?
Yeah, I think I said it all. What I want to say, guys, I really love what Andrew said. This is a lifestyle. So we really are into this breakout trading lifestyle. We live breakout trading, with brief breakout trading, but because we are into breakout trading lifestyle, we also like breaking out in other areas of life. So guys, if you like us, if you are enthusiastic, committed, if you are full of energy, if you really want to become or stay a part of this lifestyle, please stay with us also with the next episode, which is coming in 2 weeks, and stay with us in the BTA, because we're one big breakout nation, right, Andrew?
Yeah, that's right.
And we just love this lifestyle, and we hope to have you part of the community and share that lifestyle with us. So that's it.
Exactly. So yeah, thanks for joining us today. We had excellent questions in the chat. I think it's a tie between Pete and Egyptian today. Both excellent questions. Yeah, a tie. So no prize.
Questions,
Well, the prize is, I guess, getting your questions answered by Thomas, the breakout trading specialist. But if you enjoyed what we shared today, please give us a thumbs up on the video. And if you got any comments, leave them in the chat. We do. Don't poke your eyes out there, Thomas. If you got any comments or leave a favorite quote or something in the chat, we do see those. So, and please make sure to subscribe so that you get any future content. We're going to start publishing some more stuff to YouTube very soon. So thanks again for everyone for joining us. We got a thanks from Pete, Egyptian. Actually, let me put this up on the screen. We got a thanks from Egyptian. Here's one from Pete. Breakout trading course was great. Thanks from Hugo. Yoka. Thanks for joining us, Yoka. And I'm glad I can say that name correctly now. I've been practicing. So thanks everyone for joining us today. Thank you, Tomas, for coming along, even though you're not feeling so well. We appreciate it. And we wish everyone all the best. Catch you again in 2 weeks' time.
Thank you very much. Happy trading.
Cheers. Happy trading.